All right, Trendy John here from Simpler Trading. Let's go ahead and get our broad market analysis started for this week. Very excited to be here with you guys. What an amazing week last week. What an amazing last 3 weeks, right? Hopefully, you guys were able to buy that dip and take a full advantage of that. But there are some things coming around the corner, like NVIDIA earnings, right? I think we'll see some momentum, but I think that momentum may just lead us into an area of supply where we will see a rejection. We'll get into that here shortly. Let's go ahead and cover the dates we are going to be looking at tonight. 25th of August into the 30th. I can't believe it. So we will be closing out the monthly candle this week. So very, very important to understand that. And as I close my eyes and think real quick, that we are already through 8 months of this year is absolutely mind blowing. And I believe that we're just going to really get into the thick of catalysts, right? Catalysts out of left field, meaning political election type stuff that's going to come into the market and probably around this supply zone, right? That we will probably see some volatility. So I want to keep you up to snuff, basically, so you understand what these levels are, okay? Let's go ahead and get into it. The first thing we're going to be talking about this morning is our US economic calendar. And I just go to Market Watch to get this information. What's important about it is not that we trade off of it. I just want to make that really clear to everybody that's listening right now. These are news catalysts that we are aware of, and we want to understand the times so that you understand when they're going to crank up that volatility. And these are just catalysts that push price into the levels that I'm about to show you in some of those charts, especially for our future charts that I show you uh, at the end of this video. Okay. So again, it's not that, news can't be important. It's just to understand when it's coming out. We don't trade off of news. So I am a trader. I'm not here to dissect the information. I'm not a financial advisor. I am a technical trader. And guess what? We got thousands of people that say it works. So listen up. Monday, August 26th, we have durable goods minus transportation, San Francisco Fed president, basically a talking head interview right there. Tuesday, the 27th at 9 o'clock. And again, these are Eastern time. S&P S&P Case Shiller, consumer confidence, and then on Wednesday, another Fed President Raphael Bostic speaking, and then Thursday we have initial jobless claims, advanced U.S. trade balance in goods, advanced retail inventories, advanced wholesale inventories, GDP second revision, pending home sales, and then again Bostic speaking. Friday, personal income, personal spending, PCE index, if you will, Chicago Business Barometer, and consumer sentiment. So, overall, in my opinion, it seems this isn't too jam packed. We had Jerome last week. These are just, again, smaller catalysts, I believe. So, we may see some stuff kind of come out through news feed, right, that hits the wire. And I want you to be aware of that because a lot of times it'll come around these supply zones that I'm going to show you a little bit later. The next thing that I want to go over is your earnings. All right, so for this week coming up, we have some good names still out there. Like I said, let's start with Monday. Trip.com, maybe something I'm interested in. I love trading earnings regardless. So we like to trade whether it be debit spreads or just straight up. I'm just going to use technical analysis on this. And I want to go over the names that I feel like I'm interested in. It doesn't mean I'll necessarily trade it, but I'll take a look at the charts, and if they look great and we look at risk to reward, then I will trade them. Tuesday, moving on down here, right off the bat, just like last week, I told you I really like Ross, I like TJ Maxx, I love Kava, and those did really well, and I traded those into earnings. This down here, anytime I see Nordstrom's, any kind of retail, clothing, especially as we went into the school year, and a lot of these just have killer deals. And in a time with inflation, I want to pay attention to the chart. Technically, if it's set up, I really like this into earnings. Over here on Wednesday, of course, we have A&F, Abercrombie and Fitch, Chewy. I have in my portfolio, I have a very wide butterfly to the upside into 2025. So they're like 20 wide. All right. And that's how I want to trade it. But we also got involved with Chewy in January, and we bought leaps, and it was really amazing because they didn't look too great, and then all of a sudden, Roaring Kitty had said something or posted something, and those things went amazing. All right, so they worked out. Now I have it. I don't plan to sell it. We'll see what happens. Again, just using a butterfly into earnings into 2025. Coles, another one of my favorites. Not, it wouldn't be my wife's favorite, but it's one of those names where I think you should pay attention to it into earnings this week. Foot Locker, don't really care. Nvidia, that will probably be the most important name this week that a lot of traders are talking about. Now, for me personally, I don't think one name um, can create such a big move to the upside or downside in the market. I think what they can do with this name as is basically use it as a decoy. And so what I mean is, and again, I'll show you this a little bit later. Let's just say they do really well, as long as the Nasdaq is not through a supply zone, and I'll show you that here shortly, then I believe it's just a decoy. It'll pop us into that, and it will be an opportunity for bears to probably go short for a little bit and for us to see digestion. But again, I'll get to those levels here just in a few minutes. CrowdStrike, of course, if you bought the dip, that thing's been looking great. I have a little story I like to share with everybody. I actually bought CrowdStrike on that dip. I bought it after hours on that 24-hour thing with Robinhood. It was confirmed, just like my buy in Nvidia, it was confirmed, and then come to find out it was not confirmed. So that was a really sad story for me, meaning something with their third party. I wasn't able to get my shares. I thought the whole time that I had shares. I wasn't looking for news. I thought I had these shares in my Robinhood account. Come to find out I did not. Pretty upsetting. So both of those stories, just kind of annoying, to be honest with you. But nonetheless, they are reporting this week. Salesforce, Affirm, Okta, all names that I like. Five Below, of course. And then over here on Thursday, we have Best Buy, Dell, Lululemon, Dollar General, Ulta. Love to see what's going to happen there. And then the rest of them, not really big on my list. Maybe Mongo. But other than that, guys, that's all I see for this week coming up. The next thing we're going to be looking at is the quarterly candle on the SPY. Every one of these candles represents a 1 quarter. Okay. And so these are very important. I like to go over this every week and give you an update and just kind of let you know how things are going. So, right now on TradingView, one thing I love about them is that they tell you how long until this quarterly candle closes. So, we still have 1 month and 6 days left. As of right now, that is a continuation candle. We have one, two, three, four. And you can see my trendy indicators let me know, hey, this is a buy back during this time frame right here. And ever since then, there's a lot of technical things we can take out of this. As long as price is staying above this cloud, we stay long. The next thing is, though, you are noticing that we do have some diversion between this cloud and current price. And a lot of times during any kind of nice digestion or a setback in the market, we like to come back to this quarterly cloud. And I like to remind everybody that this quarterly cloud has been working since, if you look at it this way, we reclaimed it here. And so this is back in 2010. So yeah, 14 years. All right. So every time we come back here, it could be sudden, it could be deep, it can be scary, but I like to remind everybody during this time frame, it could be a great opportunity to buy, especially if we get some kind of weird catalyst, I don't know, election year, and we pull back into that cloud and it scares you. This is where I'm going to be looking at buying long-term calls if we indeed ever get there. Now, this will play out. If we continue to go up towards 600 this year, I still want you to remember what I'm saying about this quarterly cloud. Now, let's read the notes. These notes are pretty straightforward. If you have any questions, please reach out to me. As far as today is concerned, the 25th, price has moved above the 88.7. That's a coefficient that I use on my Fibonacci tool. And it's 88.7 of the all-time high. 2 to 3 days above this level, look for a new all-time high. So that's some probabilities Looking back at the 88.7s and rallies and so forth, we have a very high probability of making an all-time high. What I'd like to see, and I want to take you to a whiteboard just really quick. What I'd like to see, let's say this is the 88.7, price has moved up over it. And now we break it into a day. All right. And what I'd like to see is a pullback into that level. And then the next day, what I'd like to see is a new pivot high. And that's where I'm talking about we could see that new all time high. Okay. Now, this will serve as the over under for this week. And that level is 559.30. So you don't have to break it down into pennies if you don't want to, but this is the exact number using the coefficient. So you could just, give it a little bit of breathing room and say 559. An all-time hard, an all-time target of 568 if price can hold 559. So basically, I'm looking for the next Fibonacci extension that we've had over here for many, many months. That would be my next target of 568. Our support, and it worked really well this quarter, actually very, very well. And we've been 3 weeks up since pulling back into that support. This is going to remain support for this entire quarter. So for the next 1 month and 6 days. Now, if we make a new high, then that support will come up. Notice if I click on this, you're going to see where I'm anchoring my fibs, where these two circles are. So I'm using this rally to here, and I'm finding that 23 and 38.2. If we make a new all-time high, then I'll drag this circle to that all-time high, which will give us a different support level. But until then, this is support for the rest of this quarter. Now, let's go ahead and go into QQQ. Same thing. We're going to take a look here at the quarterly. And you guys can see this baby's looking nice as well. And same story if you go back since, many, many years ago, the cloud's been working very well. And if we get an opportunity to buy there, we'll be looking to buy there. Let's go ahead and read the notes. A higher high on the week, the 76.4, so not the 88.7, but the 76.4 coefficient on the fibs, stop price where it was last week, okay? On a positive, price is above the 618. So what I'm looking at is when I measure the rally, right, we are above the 618, which means the trend is still intact. I believe we are headed to 489 by 503 as long as 473 holds, okay? Long as 473 holds. 465 by 441 remains a support for this quarter. So the same exact thing, 1 month, 6 days, you could see that we have this, and this will not change unless we make a new high. This level right here, this target, was a target that was part of these extensions, and we had already hit it, and we pulled back, and we kind of expected that. But now, again, I believe we can continue to move higher as long as the support holds. Now, again, these are wide ranges, but we are paying attention to a quarterly. This is for traders who are not always sitting in front of the charts and who want the technical analysis for the longer term. Okay, so that's what we got there on the Qs. Next thing I want to look at is the dollar, which is going to be the DXY. Go ahead and type that in. Now, here, I just want to point out a couple things. We don't usually use the quarterly, but since we're on it right now, I'll kind of drill down for you. This is a huge double inside, and now we are going down. It looks like when I'm looking at the dollar, we could be headed all the way down to 93. So for anybody that's into the dollar and is really paying attention to it, this could be a huge pullback into the election. So again, maybe around 93. Now, I do believe that we'll see a bounce in here. We are currently in some smaller time frame demand zones, and we're going to see that here in a second on a weekly chart. This is the monthly. One thing I want to take from this, we're going from green to white. That means the momentum is changing, EMAs are crossing, and so forth. And so the momentum has changed in the color of the candle. Now, it is also important to make sure we understand that we knew supply was here many, many months ago. Matter of fact, over a year ago, we saw this, right? So we took into account that the dollar would be dropping, and it did. We created this beautiful inside and down formation, and this is where it's led us. The next thing I'm going to notice here is the weekly, or help you notice, is that we came into the demand zone that I gave you. We are there. And right now, we did close on a very bearish note, if you will, but we closed right at the bottom of this wick. So we are threatening to take out or make a new pivot low, and that would lead the dollar back down towards 99.17. And I do expect some sort of bounce in here, but I think it's important to understand when we look at the range to the downside, there's not much to worry about on the dollar unless we were to get over, let's say, 103 and a half. So for right now, 103 and a half is kind of that area. If we break over it, I'll start to, my yellow flags will come out and say, okay, there's a little bit of caution. All right. But again, I believe that we're going to head down into this 93 level until I'm wrong. Until I'm wrong means we get above this supply zone up here. So you can see, again, I have a wide range that I believe price could fluctuate in here, and we could see that it could do this, but I do believe that the dollar could end up coming down to here before we get a significant move in demand. So what does that mean? It means for me that the market is extremely bullish going into the end of this year and maybe into February. Now, I did start building a very small position, debit spread puts for March of 2025. And as a disclaimer, I'll tell you, hedges, in a bull market, they just tend to be a waste of money. So I'm allocating a very small amount at the moment. All right. All right, let's go ahead and move on. Next thing we're going to be looking at is the 10-year. All right, so that's going to be TNX. And we're just keeping an eye on this. Our analysis has been spot on. I was looking for rate or the 10-year treasury to come all the way back down into 3.4. I do believe we're headed to 2.9. Again, all of this makes sense when I'm looking at the dollar and the TNX. And again, this is straight technicals, no other kind of outside influence. And I'm wrong if for some reason the 10-year gets over 4.351, then things start to look a little bit more hairy out there in the market. But again, things are rolling over. Resistance is up here around 4.1. We'll probably get this little H formation where we could pop, but then we roll, bounce again, and then just kind of head down here to 2.9 again. All right. So that's what I'm seeing in the 10-year treasury. Now I want to talk about the skew. The skew is very important. It's a very important part of this analysis that I teach you every week. This really gives me, whether to get aggressive to the upside or start to get a little cautious. This is telling me to get a little cautious here because you can see every time that the skew comes up to about this area that the skew drops. Now, just so that you understand, when the skew drops, that means more fears coming into the market. And you're seeing, like, if you were to put a SPY chart behind this, you would see that the SPY, the QQQ, all of those tend to lead down when the skew gets too high. Now, this box right here has been a very important part of our analysis this year. Every time prices come down to this lower red level, I have, let the team know we're looking at calls 5 to 10 days out, and those have been super powerful to the upside. So 5 to 10 days out, whether you're SPY, Qs, whatever you want to use, the market's been really, really strong. But again, we are at 153, I believe. Yeah, almost 154. We're getting, to that area of caution. And you're going to see here when I show you the ES and the NASDAQ, we're very close to supply zones. The dollar and the TNX are in an area where we can bounce. All right. Even though my overall sentiment is down, we are in an area of a bounce or a demand zone. So therefore, all of this really lines up here, and it just all makes sense, right? With some big earnings around the corner, the announcement that most likely these guys are going to cut. And if you look at historical information from what I'm seeing, cuts aren't necessarily bullish for the market. But one thing that is different is that this is an election year, and all of that historical jargon is BS to me. I just don't care. What I care about is price. So our focus is price and using all of these levels. This is my thing. You cannot say that, right in this area, you want to be careful. So my overall sentiment here, guys, is that, it doesn't mean that we can't trade long, but it does mean that I want to take some profits. Like say we open up tomorrow and my positions, I'm primarily net long. Anything that I could take some profits off of, that's what I'll be doing. And if I'm intraday trading, I'm aware that we're in this caution. And if I go long, I may be taking profits a little bit sooner. So I may not be looking for 100% gainers, right? We may be taking things off at 30, 40, 50%. Just kind of depends. All right. Let's go ahead and move down. We are now going to talk about the fear and greed index. So the fear and greed index right now is at 53. It jumped up about 20 points, which means, people are starting to feel a little bit more comfortable, right? And this thing kind of swings real comfortable, extremely comfortable. I'm a little fearful, extremely fearful. We're right in the middle of neutral. Now, why does that matter? Because everything I'm showing you is, we're at that cusp. It's like, uh-oh, yellow flag. Things may bounce, in the TNX and the dollar. Uh-oh, ES and Nasdaq are getting close to supply. So again, it all makes sense. And by the way, Nvidia is coming up, right? Nvidia. So what is that going to do with the market? Again, I think it's a decoy. I think it's going to push us into supply, whether that's after hours when they do their earnings. I do think it's a catalyst to push us into the upper supply zone that I'm about to show you in the ES futures. So hang on, here we go. ES futures, where are we? We're going to start with the weekly. This is so important, and this is what has led us to success. We dipped 3 weeks ago right into this fresh demand zone. And what's really neat about supply and demand is that I had this level here far in advance. You have to understand that. If you don't know anything about supply and demand, we are identifying where the markets are going to turn. We are aligning ourselves with institutions, David and Goliath, right? You can, and I don't care what anybody tells you can align yourself with bigger money and start to think differently, think like an institution, trade with an institution. You don't need to know where volume is. You need to know where these guys are because you're already lined up with the volume that matters in the market. If you were sitting right here like we were, then you're riding the trend of this beautiful rally. But as I said, we are moving into caution. We have a supply level here, and this is what I want to tell you. 5680, and I'm giving some room here. 5680 is kind of early, and then the 5733 is kind of on the back end of that supply. It's obviously an all-time high, but I'm trying to give some flexibility in this zone. What I'm trying to say is, let's say that the actual zone is this big. I'm making it this big just to give us a little bit of wiggle room. Okay, so that's what you're seeing in here between 5680 and 5733. And if for some reason Nvidia, and some other factors in the market, rates, election year, this week say, hey, hold my beer, and they want to continue to the upside, then we start to look at the 5800s, and these are fib extension targets on the ES futures. Again, this is a weekly chart. So again, this is for the person that's not in front of the charts all the time. All I care about is by Friday, just a few minutes before the close. Can the support hold by 5540, by 5606? And are we in supply or did we break through supply? Okay, these are your two major levels going into this week period. Let's go ahead and move on into the daily. The daily, I have it set up a little bit different. It's on a 2-day candle. So every candle represents 2 days. Why do I like this? Because it resonates with our overall methodology. You could see that we're going inside enough formation. We have a nice little buy signal here. You could see back here, around 8:13, we had a trendy turn signal, which lets us know, hey, it's time to be looking to go long if you're not already long down here. Red to white to green, so momentum's changing. Your EMAs are starting to swoop to the upside. I like what I see. The resistance level for this week is using the trendy edge at around 56.54. That's going to be resistance tonight. Say we pop up and we hit that level, I would expect it to reject and we just kind of open up sideways tomorrow. This level right here says short trigger. As a reminder, if you're in the trendy room, which you should be, and before I go on, make sure you please hit a like this video. All right. Remember, this video is something that I do on my Sundays to give to you guys, and I hope it really helps you. So just show a little bit of appreciation. Give me that like and share it with your friends and family. And do me a favor, share it with somebody who might be part of a different service who is having a hard time because we just want to help a lot of traders out there. Okay. So, short trigger, we look at a smaller time frame. So we understand this level, and when it gets there, we don't just say, "Hey, we're going short," even though it worked really, really well last week for the Nasdaq. We don't just go short. We look for certain things to line up on our indicators. So we look for trendy turns. We're looking at a much smaller time frame to get that short in. All right. So if it doesn't, then we just continue to ride the trend to the upside. Not a big deal. Same thing to the trigger longs. If price comes back down here, I don't want you to just close your eyes and pray and take the trade. I want us to look at our technicals, and if they are lining up on a smaller time frame, we'll take the longs. Okay, but these are two areas where I would expect buyers to show up. Now, let's go into our smaller time frame, the 4 hour. This is what your chart looks like for this week. We have a 4 hour zone or support around 84 by 30. And if for some reason this breaks down, my next one would be 54.96 by 54.29. The supply zone to the upside is represented by this candle formation, and it should be pretty close to the numbers I just gave you on the daily. But here is where you can really see it. You can see the inside and down formations there. Okay, let's go into the Nasdaq futures. And same thing, we're going to work over here with a weekly. And let's get so let me before we move on, let me just read this for you just real fast. Overall sentiment for the ES futures caution as we approach the supply zone. In 2020 in 2024, supply zones have merely served as a temporary rejection. It's important to note that we are going on our fourth week after 3 consecutive weeks up. In most cases, we'd see a pop and then a digest after 3 weeks. I do believe Nvidia can bring some momentum in this week, but regardless, we are not extremely bullish until price is up and over that red box, that supply zone, and then the Nasdaq can get over its supply. So a little bit different look here. So just so you understand, the ES futures are about right here, as far as Fibonacci's are concerned, and far as the Nasdaq, we're just kind of sitting right here on the 618. Now this is really important. The 618 is a big deal. Basically, what we did was we measured this way with our coefficients, and once we break above the golden fib, that lets us know that price is now broke this little downtrend that we had going here and is now back in the uptrend. Okay, so there's a lot of momentum here to the upside. Now, the 76.4 is very important. That's another coefficient, and the 88.7. So both of these levels are targets to the upside. But again, I believe if NVIDIA is a decoy, it'll shoot price into here. The ES futures will be in its red zone by then. And then really it's the aftermath. If these guys can't get up and over this, I believe it's a decoy that pushes price here, and then it's just a rejection. And if you buy the top and buy that momentum, you can get owned. So be careful because this is what we call the bear house. They can kick you out at any point. So the way that I'm approaching the market this week, again, is kind of a day by day basis. And then at the end of the week, are we above this? Are we back below certain levels? That kind of stuff is important. So major levels here for the NASDAQ. Can we hold support 19,425 by 18,968 and a supply zone? If we get there, be careful. Doesn't mean like we can't go long. It means, pull those stops up, take some profits, have fun. Or can we break out over it? I think that would be a really big move above 21,000. So I do believe the most we'll see is in here. And if I'm wrong, that's okay. I'm a bull by nature. Let's go ahead and move into the daily. Same thing. This is a 2-day. Notice that we are momentum red to green. We're not quite inside and up. Your resistance is coming in at 19,969. Notice a little bit different this week. I have two different short triggers. So if we're going to try and short this, it'd be at two different levels, around 20,333 or short trigger around 20,700. Both these areas could serve as a turning point. Last week's was dead on. It worked very, very well. And then my trigger longs, I kind of pulled up a little bit. I'm a little on the fence about this, but for right now, 19,415 by 18,971. Now, why am I on the fence about this? Only because when the NASDAQ pulls, it really is aggressive and can get a little bit deeper than what I'd like to see. But I do believe that this is a good area in here. Again, 19,415 by 18,971. Let's go into the 4 hour. The 4 hour, this is the same chart that I had last week. I did change up this zone, so pay attention to that. If you used last week's, you need to go in and update it. We are still in the 2 hour plus the 5 hour zone. And so it did what it's supposed to do. We, got long down here at the 4 hour. Up here, you start to, bring those stops up. Be careful in here. And this is the same way, just so you understand when I was showing you the bigger picture, this is what I would expect. Again, supply zones are bit just merely areas of rejection, but they tend to just kind of hang in there and start to make higher lows. And then, maybe we break out to the upside. But this is exactly what I would expect if the ES and the Nasdaq on the weeklies get to those supply zones. I don't usually see that they just break right through. Again, usually serve as a rejection area. Next chart that I'm going to be looking at is going to be the Bitcoin. So let's take a look at Bitcoin. Last week I was bullish on it, and let's see what's happened since then. Basically, the idea was as long as demand zone worked, I'm looking for a price to move up here towards the 65,000 by 67. We're almost there. To complete this leg, I'd expect price to get up here, and I want you to vision what I just showed you, what happens in supply zones, rejection, kind of digest, those kind of things. It is getting a little ahead of its skis here and could pull back into 62,305, but it does look pretty solid, at least into the red box. If we break through this, expect price to probably end that leg around 68,800 or so. So we still got about 5,000 points, and on Friday, we started to get that move that I was looking for at we were up 5.91%. So things looking pretty good over here in Bitcoin world. Next thing I want to show you is going to be the VIX volatility index. These two levels, basically what I'm saying is we're getting close to the caution to the downside. So if the VIX kind of melts down and pulls back towards 14, and the dollar starts to look like it's bidding, maybe the ES and the Nasdaq are close to the red zones, then just this is sort of that yellow flag to let you know, hey, just a little bit of warning right there. Okay, so that's what we got for this week's broad market analysis. Don't forget to give us a like. Come check us out at simplertrading.com. Can't wait to see you guys and can't wait to trade with you tomorrow morning. Have a great day.